Hi, everybody. In this video, I've got a guest again, Jeff Clark, Senior Precious Metals Analyst from goldsilver.com. Jeff, how are you doing?
I'm doing great, Mike. It's great to be back with you again.
Yeah, I really enjoy these conversations. Uh, I've said before that I focus on economics and monetary history and just keeping track with what's going on in the economy. And I'm really not I know about gold and silver, but I don't know the mining side that much. Jeff has always really kept up with what's going on with mining. And in his articles, the last video we did was on the silver supply demand crunch. And this is part 2 of the silver supply demand crunch. And the primary producers are stuck in quicksand and they're still sinking. It is really an interesting situation. There is going to come a time where you're going to see triple-digit silver, and these are the factors why. There's a shortage that's developing, and demand is increasing. So tell us a bit about this article, Jeff.
Well, I was continuing to research mine supply for gold and silver, but for silver in particular, I noticed that it's really deteriorating. It's rolling over, and the primary silver producers are having a very hard time growing their production. And the whole reason is due to the silver price. It's just too low to incentivize them to build new projects, continuing mining, expensive projects, or to explore for more metal. They have smaller budgets now. They've been high grading. There's a lot of factors like this that have contributed to this, and they are stuck in quicksand. It's going to be very hard for them to reverse. It'll take lots of time and lots of money for them to do so.
Yeah. I also believe that, when CPM did these calculations and they make a projection for 2019, the silver price was higher then. And so with it down, in the range of $14 and so on, the producers are losing even more than when these projections were made. So I believe that this is going to come in with even less supply than they're projecting for 2019. Do you agree with that?
It's very simple. There's just a dearth of new silver mines that are scheduled to come online anytime soon. They just haven't been spending the time and money to develop a lot of new projects because it's not financially in their best interest. So not only that, there's a number of existing mines that have shut down. On top of that, they've been high grading, like I mentioned earlier. So all that's left after they do this high grading is low grade ore. That's going to take a lot higher silver price for that to even be feasible. So there's a real crunch that's forming there that's quite concerning. And I think it'll be fun days for you and I that own silver, because in itself, like you said, it could drive the silver price higher all on its own.
Yeah, if any of the listeners watched the video about the gold-silver ratio, and then the last video on the supply-demand crunch, this adds up to something huge. It adds up to triple-digit silver. I think we're going to see silver over 150, and it's under 15 right now. So there's a 10-bagger in it, I believe, and that's what I've taken my largest position is silver. That's and I know that there's something bad coming in the economy, and I really have the inclination to buy gold. I want to do it, but I just can't allow myself to do it. I keep on accumulating silver. So the silver mine capacity annual additions from development projects, that's what you're talking about right now, right, Jeff?
That's right. There's been not a lot of new silver coming online. In fact, that figure from that chart that you're showing there for 2018, none of that came from primary silver producers. All the new metal, the increase in the new metal that's coming to market came from secondary sources, came from base metal operations where they're producing silver as a byproduct. So the primary
lead,
silver,
zinc, right?
Yes, exactly.
Yeah.
Exactly.
And so if there's a global slowdown, and I believe there's one right around the corner somewhere, That means less copper plumbing and wiring for homes being built all over the planet because the real estate boom comes to an end. There's less lead for car batteries demand, and less zinc castings and so on. And so you have no demand for those base metals that are causing the additional supplies. So those supplies dry up. So in the last article that we covered, you showed how mine production was falling. That's going to fall even further. And so this is very, very interesting. Now, all-in sustaining costs of primary silver producers. I read an article recently where some of the silver producers are paying a couple of dollars per ounce of silver for somebody to buy it from them. They're losing like a couple bucks per ounce. Now, these all-in sustaining costs, you just pointed out, Jeff, that it doesn't include these factors here. So the true cost before the company becomes profitable is actually much higher than these figures. So there's a lot more companies that would be in red here than this actually points out. Correct?
That's right. You'll see the ones in yellow that are actually have their all-in sustaining cost figure that is below the current price of silver. So you think they would be profitable. And if you look at just this all-in sustaining cost figure, they would be profitable. But that figure does not include several things. It doesn't include taxes. It doesn't include working capital. It doesn't include interest or financing charges. It doesn't include M&A. It doesn't include impairments or write-offs and things like that. So you add in all those costs, and they vary for each company, of course, but you add in all those costs, and that's why those companies are highlighted in yellow. Are they really making a profit? Well, with the all-in sustaining cost figure, they may be, but when you add in the other stuff, they're probably truly not. And so there's not a lot of incentive. That's the point. There's not a lot of incentive for them to grow production or go looking for new mines or develop projects. A company is not going to spend, millions and millions, and in some cases, billions of dollars building a new project, a new silver mine, if the price is not going anywhere. So even if the silver price were to spike, they need to see a sustainable rise in the silver price. They need to believe that silver price is going to remain high for years before they're going to spend millions of dollars and years of time and effort developing new projects. So that's why I say that this decline in production is a structural thing. It's not easy to fix. It's already taking place. It's already happening, and it's going to be very difficult for them to reverse and suddenly spit out lots of new metal. That's just not going to happen overnight.
Right. Yeah. So there is the only way out is higher silver prices. That's it. There's no other way. I absolutely believe that. So we got something pretty spectacular coming. I don't know when. I just know it will. And so that's where I've placed my bets. Same for you, right, Jeff?
That's right. I do own a fair amount of silver relative to my net worth. That's where the buying is right now. That's where the opportunity is right now, is in silver over gold.
Okay, I think that wraps up this video. If you got anything from this or liked it, please give it that thumbs up. Share it with everybody you can. Subscribe to our channel. Click that little notification bell so that you get notified whenever a video comes out. But go to goldsilver.com and sign up for the email list, the newsletter, and you'll get Jeff's latest. He writes every single week for goldsilver.com, and you'll get some great insights on what's going on. So thank you for listening. We'll see you next time.